Hello, traders. It is Tuesday, the 18th of June, 2019. It's 8:02 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk on pretty solidly across the board. In fact, it's so on that for some reason the treasuries are up as well. Now, remember, we have FOMC tomorrow. The meeting starts today. And the expectation of the market's expectation is some softening. This overnight rally that we're in was brought to you by ECB's Draghi, who came out stating that they are committed to price stability objective. More rate cuts are part of toolkit. Speaking at the ECB forum in Sintra, all options were raised and discussed in the last policy meeting. Interest rate cuts and more QE are part of its arsenal. ECB has headroom for more asset purchases. So it's all there. So that set us off. The market is the ES is gapped up. It's trading at 29.14 with a high of 29.16 from yesterday's close, which was 28.96. So we're almost 20 points higher from the prior close and at a 12-point gap currently. So that's what's on deck. We did get the May housing starts number. Came in at 1.27 versus 1.239, which was better. The market popped pretty hard. I'll show you that on the heat map, on CT Bookmap, and has been flagging since. And that's where we are. So again, risk on for today. The market's just been, overall, the indices have I shouldn't say the market because it's made up of so many components that move opposite of each other, but the indices have been in a very, very, very tight, flaggy kind of balance for a couple of days now. And again, in anticipation of the FOMC. The FOMC is likely to be a mover come tomorrow. Out of curiosity, a quick poll. Do you believe that we will move higher from the price from the SOC or the price at the announcement, or lower tomorrow? Just a 50-50 guess. What do you think? Put your vote in. Just say higher or lower. What's your expectation? There are a few clues that I was looking at in terms of how the market is rigged up. We did have an excess at above 2,900 in the ES, which we're taking out now. And we have weak lows, but now that it's pushed higher, it looks like the market is really, really gearing up to continue. So here's that's what we've got in terms of what's on deck for today. We got the zoo sentiment survey from Germany. It was pretty bad. Came in at negative 21.1 versus a consensus of negative 5.9. And then I mentioned the housing starts numbers. Other than that, we really have balanced trade for Japan. That comes out at 7:50 p.m. Eastern U.S. time, expecting negative 979 billion yen. And again, the ECB's meeting is ongoing, and we may get some more comments or releases from there. POTUS jumped on this bandwagon about 3 hours later after the Draghi announcement, stating that Mario Draghi just announced more stimulus could come, which immediately dropped the euro against the dollar, making it unfairly easier for them to compete against the U.S. They have been getting away with this for years, along with China and others. So, of course, POTUS wants the Fed to reduce rates because it's an election year next year and so on. The economy's pretty hot. So we'll see what the Fed does. There's pressure there, political pressure there, but we'll see how they respond. So that's what's on deck for today. Let's take a look at what we expected yesterday versus what we got. If I can find the right dealio. Here it is in our review segment. Yesterday, the primary expectation is an attempt to push higher into that 28.99.75 fail and push down to 28.88, poke through the low and hold steady in a balanced environment. Now look at this. This is really, if you look at, all of this here, we've been in balance for some time. You see this market just pushing up, down, up, back down, up, down, up, down, up, down, up, down. And that's what it's been doing. And we're attacking this high over here at 29.15. We attacked that yesterday. We're also attacking highs from back a little bit. I'll show you that in a bit. But completely balanced. We're completely balanced, and there's really no clear indication as to what's up in terms of what the market did versus these scenarios. The first scenario testing higher first, pushing lower. The second scenario pulling back to 28.88, and then ultimately testing that 29.0475. Here's what the market actually did. It's pretty nondescript, really. It didn't quite get to the point of control down here at 28.88 before it migrated to 29.04. Didn't achieve 29.04, didn't achieve the 28.88. Like I said yesterday, I think my ranges were very optimistic given the action that we've seen over the last couple of days. And overall, the market ended up, the ES ended up with this really weak low on the low. I mean, it's a really awful low. And just rotated higher with a weak high. Here's what it looks like on the market profile. You can see those double TPO prints at the high, giving us a weak high. The low missed by a tick. It's not a double TPO print, but the low is also, for lack of a better word, crappy. So we're getting a lot of these. If you look down the prior day, we missed the low by a tick. The day before that, we missed the low by a tick. The day before that, we missed the low by a tick. There's no excess on the lows, but there's an excess on the highs. In other words, above 2,900, the market's been doing a poor job hanging on. So this is what happened yesterday. We ended up with a profile that gives us value, barely, and nothing really clear. We broke the IB high, but could not close above the mid, which is an 88% historical probability. Did not achieve that, missed that by 3 ticks. And overall, the delta was negative despite the fact that we closed above the open and spent most of the session above. There was just more aggressive selling. But again, you got to be careful looking at delta this time of the quarter with this rollover. Here's what's happened overnight. Absolute snoozer until we get the zoo. A total snoozer, and then we get Draghi right in here. We push up, a nice little flag, and then we have a continuation that is flagging again. The high is really weak in the ES. It's pushed up against the prior week's high, 29.1550. It's poked through and it's holding steady. The point of control is near highs. And you could see from the profile, you could see what volume has traded at every price. Again, I'm using tick data here. And you could see that the profile is showing absolutely no consensus. The market battled out prices throughout the night, and the volume was actually pretty high for this new contract for rollover. When compared to the prior volumes. Yesterday's was 144,000. Today's was almost doubling that. So there's quite a bit of activity overnight. I'm expecting that to play out a little bit during today's session. It's portending or potentially predicting that there's likely to be action coming in from both sides as we push into today's session. One thing I want to remind you of is that we are still in a rollover. Okay, this is what I tried to pull up yesterday. It wasn't loading. The pace of the roll has come into line a little bit. So if we look at, well, I don't want the historicals, I want to pop out. So if we look at this, how do you read this chart? Just real brief summary here. This line here, let me change the color. There we go. This line here, this orange line, is how the roll is going so far. The shadow is the min-max of prior rolls. We can pull those prior rolls up historically and look how they went. And what this has been showing is that as of 5 days before expiration, which is the zero line. So the expiration is on Friday, and that's the zero line, and this is counting how many days to expiration. As of yesterday, it was really looking like it wasn't beyond 40% and has picked up pretty well and has come into line with the session. So we are back in line with the roll. It seems like everything was a little bit slow in terms of rolling this contract when compared to the prior roll. So if you look at March rolling to June, it really accelerated between yesterday and today, and we expect that it'll be pretty much done by tomorrow. Okay. How does this impact us? If you're using volume in any way, if you're using like the footprint delta volume scope, some sort, whatever they call it, on Sierra price ladder, I don't remember what they call it. If you're using that, it becomes much more useful after tomorrow. So Wednesday, it becomes more accurate. Until then, we're at the mercy of the fact that we are rolling. So what's ahead? Let's take a look at what's ahead for today, what's planned for today. There we go. So here we are. We're trading at 29.14 and number bars. Thank you. Kind of a not so interesting name, I have to say. So let's go back and look at where we are and what the template day is. So the immediate template day, obviously, is that high from last Tuesday, but we are pushing into another template day, the 29.17 just above, and it's the point of control of this entire region we pulled up to. So we're trading against the point of control of this entire region, going back ways into May, early May. And then beyond there, what we have to pay attention to is this price right here. We have singles up here, single prints from, what is this day? The 6th of May. From the 6th of May, we have single prints up here, and that's likely to be the big target going forward. As we take out the single prints, we start pushing into the higher distribution of this micro composite, and it's 29.50 becomes the next big target up. So 29.28 is a big one to watch. I know it's 13, 14 points away from where we are now. I know we have a gap of about 13 points, currently a gap zone of about 13 points, and so we may revert back. We're still inside of the 11. So overall, the expectation for today goes something like this. Expecting this to immediately push the high, looking for this to push through the 29.17, consolidate for a little bit, come back, pull back to the 29.05, 04 area, and hold steady up here for the day. I'm expecting the range to be around 29.22 or so, 29.20 down into 29.05. Not much more than that. Not much more than that. So that's the primary scenario. I'm expecting the overnight, that weak high with the point of control at the high. I mean, look at this point of control, where we are versus the overnight high. They're all clustered together. That's likely to play out. The secondary is an open auction out of range that takes out the high and then drifts down, impulses up, gets up into 22 and starts to work its way towards 28 for the pause. Okay, I'm not expecting the market to run away very much, again, because of this key FOMC release that's coming out tomorrow. So those are the two key scenarios. I'm expecting, again, like I said on Monday yesterday, this is really an exercise in patience right now. You've got to be picky with what you take currently. Really, really important. And so overall, the magnet up above us is 29.22, and then that's a naked point of control, a bounce zone, and then 29.28, which gives us singles up to about 29.31 or so. And so the naked POC 22, then 28.75, 29. Key areas to watch above. Key areas below 29.04, 50, and then a 2900 century figure. Those are the key trigger areas for me going forward. Okay? So, hope you picked something up today. I will catch you tomorrow morning. Take care.